accounting for electricity, disposal of surplus. So in this concept, we are going to solve the illustrations. So illustration number 1. The following balances have been extracted from the books of an electricity company at the end of 2007. Share capital, reserve fund, invested in 4% government securities. So contingency reserves, investment in 5% state loan. So contingency reserve investment. This is an investment. So loan from State Electricity Board. 8% debentures. Development reserve. Fixed assets. Depreciation reserve. Consumers deposits. Amounts contributed by consumers. Intangible assets. Tariffs and dividend control reserve. Current assets monthly average. Okay. The company earns a profit of 8,50,000 after tax in 2007. Show how the profit is to be dealt with by company, assuming bank rate is 5%. For my for my convenience, I'm just separating all these items according to the balance sheet for my convenience only. So share capital. So these are the transactions. So I didn't mention the profit and bank rate in this table. Okay. Okay. Let us calculate the capital base. So for the disposal of surplus, we must know the clear profit and reasonable return. So for calculation of reasonable return, we must know the capital base. So first of all, we have to calculate the capital base. So while calculating the capital base, we have to consider fixed assets, cost of intangible assets, and current assets, as well as reserve investment. What kind of reserve? Special reserves investment. So contingencies are the special purpose. So whatever the reserve made for special purpose, those investments we have to consider. Even some problems give the reserve fund investment. So in the sense that reserve is general reserve. We should not consider that general reserve investment for the capital base calculation. So this one is contingency reserve investment. So we can take all these things. And we have to deduct the liabilities. So what kind of liabilities? So as we are calculating capital base, so other the borrowings and reserve funds except general reserve, we have to deduct it. In the sense, loan from state board, we have to consider debentures, 20 lakhs, we can consider it, and development reserve, we can consider, and depreciation reserve, consumers deposits, customer contribution, tariffs, and dividend control reserve, but not the general reserve, which is mentioned above. So general reserve and share capital, we should not consider those things. So these are the considerable items. So let us sum up these things. So it will come around 2 crore 35 lakhs. 2 crore 35 lakhs. And for the liabilities, come around 1 crore 81 lakhs. So finally, capital base is 54 lakhs. Capital base is 54 lakhs. So by using this capital base, we have to calculate the reasonable return. So RBI rate plus 2% of capital base, and income from investments excluding income from investment against contingency reserves. See, these reserves, whatever they provided, these reserves, they are investing to get income. So there, if the problem mentioned that reserve, general reserve invested in some other securities, so and at the same time they will mention that the contingency reserves also they'll put as investment in other securities, so that they will get income on that reserve. So in this case, so while calculating capital base, we have to consider special reserve investments only, not general reserve investments. So while calculating reasonable return, we have to ignore the contingency reserves. So whatever the investment made by using contingency reserves, the income on such investment, we should not consider it. If they made any investment by using reserve fund, the income on such investment, we have to consider it. Okay. So another half percentage of debentures, half percentage of development reserve, half percentage of approved institutional borrowings, half percentage of electricity board loans. So let us calculate. Okay, first one is RBI rate. So in the given problem, 5% is the RBI rate. 5%. In the sense, 7% of capital base we have to calculate. So 54 lakhs into 7%. Comes around 3,78,000. So income from investment. So in the given problem, the reserve fund invested in 4.5 percentage of government securities. So this 50 lakhs, we have to calculate the interest. If they invested this 50 lakhs in government securities, we'll get 4.5 percentage of interest on government securities. So that interest we have to show it here while calculating the reasonable return. So investment in government securities, 50 lakhs into 4.5 percentage. So it comes around 2,25,000. So debentures, 20 lakhs debentures. 20 lakh debentures, we have 8% debentures, 20 lakhs. So in this 20 lakhs, we have to consider half percentage. So it comes around 10,000. So half percentage on development reserve. Development reserve, 10 lakhs. 10 lakhs comes around 5,000. And loans, Loan from state electricity board, 40 lakhs. 40 lakhs. 0.5 percentage on 40 lakhs. Comes around 20,000. So totally comes around 6 lakhs 38,000 as a reasonable return. So disposal of surplus. So these are the standard formats we have to apply while we dispose of the surplus. So how to evaluate the surplus? First one, clear profit. So this profit is mentioned profit of 8,50,000 after tax. Sometimes they mention before interest, before tax. At that time, we have to calculate we have to deduct the interest out of this profit. So 8,50,000 clear profit less reasonable return, that is 6,38,000 surplus. It comes around 2,12,000. 2,12,000. So from here we have to be careful. Less 20% reasonable return. So see, in excess of 20%, we have to transfer the profit amount to the customer's benefit rebate reserve directly. Okay, so this 20% we have to dispose of in three ways. Okay, so whether it is excess, see here one more point we have to consider is if surplus can accommodate this 20% of reasonable return, then we have to dispose of the 20% of reasonable return. If it cannot accommodate this 20%, then we have to dispose of the surplus amount. Okay, let us just copy this for your understanding. See, if surplus, this surplus, 2,12,000 surplus is less than 20% of reasonable return, dispose surplus. So we have to calculate the 20% on 6 lakhs 38,000 into 20 percentage. So it comes around 1 lakh 27,600. So in the sense it is more than, if surplus is more, so surplus is more than this 20%, then dispose of 20% of, so this amount we have to dispose of. The remaining amount, CBR reserve, consumer benefit rebate reserve. Okay, so 1 lakh 27,600. The remaining amount 84,400. So this is the amount we have to dispose of. Okay, so in what proportion, in what ways we have to dispose of this 1,27,600? 1/3 of surplus or 5% of reasonable return, whichever is less, we have to dispose of as a award for the efficiency, award for the efficiency of work done. So it is one third of surplus comes around 42,533, and 5% of reasonable return 31,900. So whichever is less, in the sense 31,900, and in the remaining portion, whatever left over, half should be transferred to tariff and dividend control, and the another half you have to credit to the customer's benefit account. So half of the remaining portion is 47,850 and 47,850. So it is nothing but 1,27,600. So this is how we have to dispose of the surplus. So next, illustration 2. From the following information, details relating to the year ended 31st March 2008, and bearing in mind the provisions of the Electricity Supply Act 1948, indicate the disposal of profit EEC Limited. So net profit before charging depreciation, debenture interest. See, this is what we have to be careful before charging debentures interest, and fixed assets cost, depreciation written off, loan from electricity board, 6% investments from reserve fund. This is general reserve fund. Investments by using special reserves. So tariffs and dividend control reserve. So security deposits from customers, customer contribution, preliminary expenses, assets, average current assets. So development reserve, liability side. So 10% debenture interest paid in the year, okay, 7,50,000. So this one is interest paid, not the debentures. In the sense, this is 10% of interest. In the sense, what is 100%? 75 lakhs. So 75 lakh debentures. We have 75 lakh debentures. We have to calculate it and assume bank rate 8%. Okay. Okay. By using this information, we have to calculate the capital base. So first of all, fixed assets. Fixed assets 2 crore 10 lakhs. Another one, depreciation written off 49 lakhs. So I'm just taking the gap. Whatever the deductible items I'll mention. Okay. Next, loan from electricity board 60 lakhs. So this one is deductible item. And 6% investments of the reserve fund. So general reserve fund, only special reserve. See, investment made out of special reserves only we have to consider while calculating the capital base. That is 38 lakh. So tariffs and dividend control reserve. So deductible item 4,20,000. And the security deposits of the customers and the customer contribution of the main lines. So these two items are deductible items. And preliminary expenses, these are the assets. Average current assets 23,70,000. And development reserve, this one is deductible item. And 10% debenture interest paid. In the sense, we have to consider the debentures, not the interest. So 10% debentures, in the sense 100% is 75 lakhs. So debentures are 75 lakhs. One moment. Debentures. 10% debentures or 75 lakhs. So we have to be very careful whether it is interest or debentures completely. We have to identify it. So only net profit and the bank rate are left over. So let us calculate the totals. So it comes around 2 crore 70 lakh 80,000, and the deductible items are 1 crore 92 lakh 82,000. So capital base is 77 lakh 98,000. So now the reasonable return by using the capital base. So bank rate plus 2% on capital base. So bank rate is 8%. 8% bank rate plus 2%, 10% on capital base. So it comes around 7 lakh 98,000. So 0.5% on loan from electricity board. So 0.5% loan from electricity board. ₹60 lakh into 0.5 percentage, and 0.5% on development reserve. Development reserve is 2,20,000, and tariff and dividend control reserve 4,20,000. But tariff and dividend control reserve you should not consider here. 0.5 percentage. So it comes around 30,000 and 1,100, and half percentage on debentures. So we calculated debentures as 75 lakhs. 75 lakhs into half percentage. Comes around 37,500. Income from reserve fund investments. So income from reserve fund investments. See, reserve fund investments 45 lakhs. Out of 45 lakhs, 6% interest we have to calculate. 45 into 6% comes around 2,70,000. So the total of these is 11,18,400. Okay. And so with this reasonable return, we have to calculate the surplus amount, and then we have to dispose of the surplus. So If surplus is more than the 20% of reasonable return, then we have to dispose of 20% of reasonable return. If surplus is less than the 20% of reasonable return, then we have to dispose of the surplus amount. So let us take the profit before charging depreciation debentures interest. So before charging profit, before charging profit, before charging debentures interest, that is 19 lakh 10,000 less interest on debentures. So interest on debentures, the given problem directly gave, that is 7 lakh 50,000. So clear profit, we got the clear profit. Once. So after deducting the debentures interest, we got clear profit of 11 lakh 60,100. Okay, so we have to deduct the reasonable return from the clear profit. So reasonable return is 11 lakh 18,400. Okay, so the difference amount is 41,700, that is surplus. So if this surplus is more than 20% of reasonable return, then, so for the understanding purpose, I'm just copying this portion. See, if surplus is less than 20%, dispose of the surplus. If it is more than 20%, dispose of the 20% of reasonable return. So 20% of reasonable return. So 11 lakh 18,400 into 20 percentage. So it comes around 2 lakh 23,680. So surplus is less than 20% of reasonable return. In such case, dispose of surplus. So the disposable amount is 41,700. Okay. Disposable criteria is 1/3 of surplus, 1/3 of surplus, or 5% of reasonable return, whichever is less. So 1/3 of surplus is 13,900 or 5% of reasonable return, that is 55,920, whichever is less. In sense, 13,900 is the lesser amount. So in the remaining, after deducting 13,900 from the 41,700, the remaining portion we have to divide it into two equal parts, and one part we have to transfer it, half of the amount we have to transfer it to the tariff and dividend control reserve, Another half amount we have to transfer it to the customer's benefit account. So this comes around 13,900, 13,900 each. So this is how we have to dispose of the profit.